Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart, as well as the pullbacks on altcoins, and really just that giant liquidation that we did have on Bitcoin's chart. Now, that should have been expected based upon all of the kind of FUD that's been going on the macro, as well as, of course, the chart itself had just pumped so much in the last few months that it did make sense for us to have a pullback. And this pullback really wasn't unusual. If we just want to take a look at some of the macro, we can suggest that perhaps it was in part due to the fact that Jerome Powell will be speaking, this Tuesday and also this Wednesday. So here we are, Tuesday, March 7th. I do want to give you a heads up that at 10 a.m., Fed Chairman Powell will be testifying to the U.S. Senate. That could cause waves in the next week. We also have Wednesday, March 8th. Chairman Powell will be testifying again to Congress, this time to the House, again at 10 a.m. So that can cause waves. And all of that leads up, of course, to the CPI data on March 14th and also the PPI data on March 15th. So you know what they say, beware the Ides of March, and we do have a few things in the pipeline on the macro that could just cause a lot of instability. That being said, the stock market really isn't doing that poorly, and so a lot of this can be considered to be primarily just some price action in crypto. And if we just zoom out a bit, let me turn off the key levels to watch here on the daily. If we do zoom out, we can see that really we had just a really nice pump here, right? But even in that pump, we got a lot of choppiness, some up, some down, and that's how we got this kind of a double bottom here. We seem to be doing something very similar, which is what the market is terrified about, right? Some ups, some downs, and then maybe making a double top. And so what the market is hypothesizing is that just like we had this one, which then led to a pump up, maybe this one is going to lead to a pump down, and the market just may reclaim all of these naked candles over here on the side. And so that's the big fear in the market. This kind of inverted fractal is what the market in crypto is really terrified about right now. So if you see your altcoins bleeding out, that's what's going on. It is a little bit of an overreaction in my mind, but hey, this is crypto, so basically anything can happen, and even rumors and all that stuff going on with the Silvergate Bank, and then the Ethereum Shanghai fork coming up. They forked us again, right? We got Shanghaied, and also Mount Gox with the bitcoins that should be released. All of this FUD is just up in the air, and so people are kind of freaking out. But hey, maybe that's an opportunity because if we do go to that parallel channel that I've been pointing out for a couple weeks now, yeah, we've had to modify it a couple times because look at the top here, right? If you look at the top of these wicks, this is really kind of weird, right? You kind of have to keep adjusting it down a bit. And so, once again, we've just adjusted it down, but we're still within this kind of a zone. All of these wicks are within this kind of zone that just keep pushing higher and higher and higher and higher, right? Well, this was kind of a double top, but it was basically still reaching for the sky. And then, of course, the lows are doing the same thing. We haven't broken any structure, okay, guys? I was telling you in the last episode to watch out for 23,000. We did break below 23,000, and we just went all the way down to the next level, which was here around 22,000, right? Which were these price levels. If you just look at the background that I've been talking about, right? And so you can see that zone, we're just occupying that zone right above what this one was clinging onto, which itself is right above what this one is clinging onto. And so all of these support and resistances have been respected. This midline of this channel that we're just keeping an eye on has been respected. It could have been the bottom of the channel should we have gotten a nice bounce off of that. But of course, this is actually, it's kind of an art, guys, right? I mean, trading is more art than it is science, and even the best traders in the world don't really know if the price is going to go up or down. So what do? We just set, some type of arbitrary lines, some type of concepts in our mind, and then we say, hey, yeah, this is the wick low. There's kind of this diagonal right here. So if we break below 23,000, look out below because probably we're going to the next support level. And where's the next support level defined by? Well, look at this wick over here. Look at these wicks over here. Look at these candle tops over here. And sure enough, sproing, right? Boink. And then, of course, we're just getting all the sound effects as we're just bouncing off the bottom of this background zone and then also hitting our head on the top of it as we've basically been leveled down just one step, which in the grand scheme of things isn't that much. And so is the panic warranted? I don't think so, not yet. But of course, we do have some indicators that we need to pay attention to, and that's what we'll be going over in this episode. So without further ado, of course, we're still in that kind of buy area because we haven't broken this structure really. We haven't made a lower low. We haven't even made a double bottom. So technically speaking, there still is an opportunity here. It's just whether or not you think you've already traded this zone. Now, last episode I mentioned that I did take $5,000 of profit out of the market, and I hope you guys heard me that I was doing that. Of course, I bought down here, right? I bought right here. You guys witnessed this on my channel where I did describe it. And, even if I was faking or whatever, right, I still would have been buying within that same time period, whether it was a day before or a day after or on some type of a structure, okay? So even if you're skeptical, you know that the Alpha fam was buying down here, just like a lot of people were. A lot of these smart money was buying there. And so we've made all of this money. And then if we just take a look back over here, you can see that we have a bit of a channel, right, that kind of carved itself out here. This was basically a deviation. What we were hoping for was a deviation or even a bounce that could take us into the next level up here. We didn't really get that. So, the market is freaking out because they see it as being rejected. However, I'm telling you that we still have this parallel channel, this structure that hasn't been broken, which still could have another chance. Now, if we do lose this area, specifically if we lose this $21,000 to $20,000 zone, then I would say, yeah, we're probably going to come back and test the bottom of this one. And we may even break below it, just like we sort of broke through it here, right? And then we could talk about perhaps these type of lower figures, maybe even in the $13,000 to $15,000 neighborhood. But until then, we still have to play the hand that we've been dealt, which is that we're in this upward parallel channel, and so the play, is still a bit bullish. We still have an opportunity to get above this $24,000 area, which then could lead potentially to getting above 25,000. And you've seen how fast the market can change, and so you just have to be open-minded to both things at all times, and then you just set levels to where you respond to. And so that's why I was talking about stop losses at 23,000 or whatever. Of course, you guys have to manage your own risk. This isn't financial advice. I'm not here to hold your hand. I'm just being a friendly guide while I improve my own trading. And of course, the purpose of this channel is just for continuous learning, right? I'm not trying to push you to do anything. To be honest, this industry is quite risky. And I really hope that you're taking it seriously and not putting in too much money. Guys, let's go ahead, if you're a learner. Guys, if we just go ahead and put on our daily levels, of course, I did update them for you, and we can see that we do have this huge momentum pool thanks to that 5% drop or whatever that it was that just killed a lot of the longs in the market. And we do have to hold this level at 23,300 and 22,350 in order to maintain our momentum and have a possibility of recovering this candle, which if we do get over about 50%, somewhere around 22,800, then we do have a good shot at taking out the volatility pivot. And if we can flip that, then I'm going to be biased to the upside. That level is going to be approximately 23,300, and a little bit of a better momentum calculation is going to be around 23,385. So if you're really conservative, the upward play is around 23,000. Let's just say 400. You're mildly conservative, then 22,900-ish. And if you're bearish, you just want to see if we lose this to 22,350, and then below that we're really looking underneath 22,000 and underneath, basically 21,500. So there you guys go, the daily levels that I have there. The MACD will flip around to that bullish direction if we do get above 23,271. So that's for our daily continuation there. Otherwise, just being in the zone of the alpha momentum pool, it is just up for grabs. And I don't really take a play unless we're above or below that zone. And I also don't really take a play to the upside unless we're above the volatility pivot, which we're currently below. Even though we could pump there, it's just not a good bet because statistically speaking, any type of volatility push could push us to the downside if we're below that volatility pivot, which is currently at 23,300. So my bias is to the downside. Guys, let's take a look at that volatility just to see where we're at. You can see we're getting a bunch of volatility flips on the daily. I told you this zone could be really tricky. It was just flipping in the middle of nowhere, and it looks like there's another flip coming up. So all of this is very sketchy, and that's why I was warning you about it in the last episode, okay? We aren't just continuing to the upside anymore through this volatility drive. Basically, we've flipped and we're doing some weird acrobatics over here. So just be on high alert. You don't have to take every trade. Sometimes it's cool just to take some profit like I did last episode and then just to chill, right? Just chill until things become a little bit more clear. Guys, let's go ahead and take a look at some of these other indicators. You can see that we did have a chance to flip bullish over there, but whoever was the whale or whatever was going on with the exchange that just liquidated everyone, they decided to push the market down lower, and so maybe we're going to have another chance to flip bullish, but the momentum oscillators are really just saying not ready yet, no confirmation yet on that one. So we're gonna have to just take keep a watch out for that. As for our ADX, we do see that the positive DI is spiking up again after being just taken over by the DI negative. And of course, that ADX is spiking up across our threshold as the DI negative is pumping up. And so we don't like to see that. That does suggest some a negative momentum is building, and would prefer to see this pink line start turning down as this you know, as this chart starts moving, okay? Or, at least, the green cross the red, something like that. But we were mentioning that this, RSI did have a little bit of a toppiness structure here, and so it did have that pullback after all. Let's go ahead and take a look at the MACD. Of course, I mentioned the price that the MACD needs to turn around, and you can see it is just solidly red right now, pointed to the downside. And of course, the Stokes is also solidly pointed down, which again gives me a volatility bias to the downside. Okay, guys? So you don't need all the fancy stuff that I use. You can pretty much just use your EMAs, maybe a MACD, an RSI. You could use Bollinger Bands and the stochastic, and that's like twice as many indicators as you really need to trade, as long as you understand, price action in general. So guys, let's just take a look at the RSI for this last point, and on the daily, you can see that we almost had another drive of bullish divergence, but we just lost this one, and so if we close here, it's just going to be looks like just continuation to the downside. Not sure if this is going to take us further down, but this is a lower low on the RSI after kind of a lower high, and so this is a proper downtrend, and we really, aren't at risk of breaking it to the upside anytime soon. So we do need to see a bottoming structure on this RSI if we're going to um, get any hopefulness away from the chart, because sometimes the RSI can give you a heads up on its own. Let's see here. Let's go ahead and take a look at the weekly because the weekly does also close today and it has its own lesson here. So let's go ahead and let's see. Turn off the daily. Let's go ahead and put on the weekly alpha momentum pools. Jump over to the weekly chart. And you can see the structure just looks a little bit uglier, but we also have a little bit, more of a buffer here, where we do have the weekly volatility pivot all the way up at 24,877. That makes it pretty ugly because that's a tough nut to crack. Okay, like we really have to, in the next 4 hours, pump up above 25,000. Or, within the next week, this volatility pivot will probably hang out in a similar area. We need to get that pump up there, but it just suggests that we're going to take a lot of time on this next move. It's not going to be just immediate. I mean, unless something crazy happens like this candle over here, just within one day or within one 4 hour period. But as long as we're above 21,295, we do have general continuation to the upside. And as long as we're above 20,778, then we haven't really lost any significant momentum. So on the weekly, okay, for you swing traders, I'm not seeing anything terrible. I'm just still seeing a continuation of a pullback here. And if we throw on our EMAs, you can see that we've basically just checked back to the 9 EMA, which is totally healthy. We could check back to the 21 EMA, and that could be healthy too. And on the weekly, I would just see that as an opportunity that potentially we could squeeze to the upside as long as we don't hang out in this area too long. I don't want to see like 2 or 3 candles down here because that's going to scare me that we're going to squeeze to the downside. But if we just have a nice bounce, sort of like what we got off of this 9 here, I mean, basically to the dollar precision, that was a beautiful bounce. But if we just get a bounce off of the 21 like that, then I'm still going to be bullish as long as we can recover the 9 pretty quickly. So that's my perspective on that, guys. We can, of course, take a look at some of the indications on the weekly just to see what it looks like. And for the first time, we really are having these properly bearish indications on the weekly. We have this kind of confirmation of another bearish candle. Sometimes you get one, but it's just a fake out. But when you start getting a couple of them, it tends to be real. It wasn't here, so maybe we could do something like that. But this is really starting to look like a trend now, and this MACD is a bit overextended, so perhaps it is time just to do a little bit of a twist to the downside after all of that pumpiness. Guys, we can see, of course, that our momentum oscillators are also threatening to point us to the downside, so we could have a pullback. Yeah, we had a nice run, but of course it may be time to check back in. Also, you can see the Stokes, of course, that thing that's just threatening our volatility is pulling us to the downside right now. So this is in that area where we do tend to get huge pullbacks. So I do trust this move. If we do close the week like this, I would think that we would probably continue bearish. Now, it could be more shallow than people think, and we could get another drive before the major pullback. That's really common on the stochastic. So I'm not going to be just like freaking out, kind of perma-bear about this, but I do think that we could get some deeper checkbacks, maybe another attempt to the upside, and then maybe we really see what this chart can tolerate. And yeah, well, that's all I have to say about the stochastic for there. And we combine that with the fact that we do have that downward slope on the daily RSI, and then also this double top on the weekly RSI, which does have a drive of bearish divergence building up, which will confirm if price action hangs out in this area in the next 4 hours, then that usually plays out to the downside. So that would be the other bearish perspective there, guys. So just be on the lookout for that. It could be a volatile week. And speaking about volatility, you can see that we did have a volatility flip on the BBWP here. And so although all of this was driving us to the upside, it looks like we might have a flip that pushes us to the downside. And if you take a look at this angle here, you can see that we are within a range where that volatility flip would be expected to happen. And so that's why I have this area here. And once we get under here, I would say maybe we're going to look for another flip. But right here in this area, this is usually a typical area where the weekly starts to turn around just based upon the past few years. If we look at the 2-week, it's even a bit more obvious, where we would bottom out at for our next drive. And so is this drive going to push us to the downside, or is it going to push us to the upside ultimately? Well, we have to wait a while just to get some clarity on that because volatility is direction neutral, but I am delivering you considerable alpha that probably no other channel is introducing you to, which is this 2-week trend line on our volatility, which would suggest that sooner or later we are going to get a massive drive in one direction or the other. And my bet is that it's going to be up, even though we have a little volatility flip right now. Probably, I think we're just going to get another low, sort of like all this chop at the bottom here, all this chop at the bottom here. This is a big chop over here. Maybe we get a nice chop, and then we get our drive to the upside, right? So again, guys, Alpha Commission, just trying to deliver the alpha to you. And overall, it doesn't look bad. Yeah, we have a huge naked candle down here, which we could partially reclaim. But there you go. There's your key levels to watch for the weekly. 20,778 is where I would probably be worried that we could touch down to or even break below. And 24,877 is really the number that we need to beat just to make this chart continue to pump to the upside, okay? Guys, going to end it there. Those are alpha for the day. Stay safe and happy trading.